All right. Well, welcome everyone. Thank you for being with us. Today, we'll be talking about political hotspots with our expert, Dr. Chris McKee. Chris is the CEO and owner of the PRS Group that puts together the International Country Risk Guide and its ratings. And Chris is an expert on geopolitical and country risk assessments. So, with only 30 minutes, Chris will do his rundown, and then, of course, we'll open up the floor for your questions. So, as always, I encourage you to leave your cameras on, unmute yourself if you do have questions, and thanks for being here. So, with that, Chris, the floor is yours.
Okay. Thank you, Tracy. I appreciate that. And I appreciate everybody for showing up today. I think at the beginning, I mentioned to Tracy that I want to talk about, some of the things that are in the news right now, some of the sort of the topics that we read about, but perhaps give you a different slant, or at least in terms of where we're coming from, and then a kind of outlook on what we think is going to happen, or at least what might transpire realistically over the next little while. And I talked about, the topic of China's reopening, at least on the COVID side, some of the protests that are going on right now in the UK and France, what we saw in Brasilia a couple of weeks ago, and then just the whole notion rather of inflation. Where's it going? Is it peaking? And what are the implications for, for traders or for the investors and so on? So I'll just talk about those sort of things, and then please ask me questions, because I like that. And I think a lot of what I'm about to say, we all know. I just want to give you a different perspective on it. So if we do have questions, at least we can approach it from that angle. So with the China reopening, that is to say the abandonment, if you will, of the zero COVID policy, I think for the most part, that caught a lot of people by surprise. Okay. But if you look at what was going on in China at the time, it doesn't seem all that surprising. In other words, it almost was inevitable. It was just a question of when, not if. And, the primary thing, and we don't usually talk about it too much, is that, at least from a domestic perspective or an economic perspective on the local economy, China wasn't doing very well. Okay. There were sectors of the economy that were pretty much in the tank. Real estate wasn't doing well. Consumer confidence was at a decade low. And the other problem they had at the time, and they still do, and I think a lot of the Western press doesn't cover this, is that there is a real big unemployment issue, especially among younger people. Okay. And the unemployment level, I think it's like 26 and under or something like that, is around 20%. If we had that in the US, that would be an issue. It really would be seen. And I mean, we did in the 90s have a very high unemployment level with the youth, and there were some repercussions from that. But it's something that I think, nobody really talks about too much, but was clearly on the minds of Chinese officials. The second one were the protests. Okay. And I mean, they were obviously a response to the lockdown. They were also a response to, I think, a longstanding history in China of protest surrounding the extent to which the authorities permit certain types of freedoms. Okay, freedom of expression, freedom of assembly, and things like that. All you have to do is really go back to, and there's only probably a few of us that remember it, but go back to the late 80s with Tiananmen Square. I mean, that was clearly about a kind of desire among the local population to open up, to get some more breathing space, if you will. And so the lockdowns, I think, made it worse. But if you look at the demonstrations themselves and what the demonstrators were saying, there were more issues involved than just simply, let us out because we want to move around. And then, of course, I think, the fact that that Xi was put in power for another mandate really opened the gates for that. That was out of the way. There was no more political maneuvering. He received another governing mandate. So all of those things were set in place for this reopening. And I think when you combine all of those events and then compare them to, really the rest of the world getting back to business, as it were, the decision to abandon the zero COVID policy, if you will, was inevitable. So With that being said, what do we see and what are the ratings that we cover or we have for China showing? Well, the overall risk profile, because of the new mandate for Xi and the extent to which the protests for the most part have been dealt with, the overall risk profile for China has improved slightly. Okay, as I said, the leadership issue has been dealt with and the protests have subsided. And I think on that basis alone, we know that China is now looking to re-engage with the rest of the world and probably be a little more constructive in foreign affairs than was the case during the lockdown. There's been bilateral meetings with the US and other countries that we've been talking about or reading about. And we don't hear, and this is, I think, especially telling, we don't hear a lot of the negative rhetoric coming from Beijing that we did over the last couple of years. Seems to be a much more constructive and much more positive way, at least on the diplomatic front, than China was, say, during the COVID, or at least the real heavy COVID period of the rest of the world. I think what we are all looking for right now is the way in which this wave of infections are going to play out. Many people, as you know, have voiced their concerns about China's transparency on the data side. And I think we're told now that the infections have essentially peaked in the urban areas. They're now stretching into the rural areas. And I think the million-dollar question is whether through all of this, a new variant comes out of it, and that is the extent to which it evades existing vaccines or any other types of protections that we have. That would be huge. Okay, that would set us back another couple of years, and that, I think, is the big wild card. So that, again, is something that everybody is looking for. So far, so good, I think, but that is, I think, a huge political risk out there, because the implications of that coming to not only the global economy, but the way in which China is trying to reopen, I think would be huge. The other issue is that although the authorities discarded the lockdown protocol, if you will, they've actually gone after those that were doing some of the protests during those days. I mean, these are not huge numbers of people, and it's clearly not of the kind of clampdown that we see going on in Iran, for example. But I think the authorities don't want to be seen as bowing to the protesters completely, but realizing that certain things were inevitable, certain things had to be changed. So we're also looking at that. And I think, again, that's really nothing new in China's history. The authorities always have a very, hard hand, if you will, when it comes to certain types of dissent. So ultimately, what do we see? We see China returning, I think, to the way it was prior to the pandemic, ultimately, looking to encourage economic growth, all the while remaining, or at least exercising a very firm grip on dissent. To the extent that the pandemic caused various supply chains to be adjusted in favor of countries such as Vietnam and Thailand, I think that is there. It's going to take some time for China to reemerge on that score. And I think, again, when the COVID policy was abandoned, I think they were quite aware of this fact that this is all part of, the re-engagement, the resurrection of the economy. So that's our take on China. It's not a terribly bullish take. It's a wait and see. And, if you look at the overall scores for China, we still have it in a very, it's not a moderate risk. It's a sort of moderate to high risk category as far as overall geopolitical risk goes. But I think it's improving very, very slightly, but with a lot of downside risks to it. What I think is actually more important, or at least more interesting from a geopolitical perspective, and probably a little more predictable, is the kind of unrest that we're seeing, or we have seen in Brazil, and that we're now seeing in France and the UK, and perhaps in other places, depending on how it pans out. Given economic conditions, and especially what inflation has done to purchasing power, I don't think any of this obviously is surprising. But in the case of the UK, they have a very, at least a traditionally strong organized labor movement, and strikes, if you go back to the early 1980s and the late 1970s, I mean, that was a part of the economy that was huge, and this is when Margaret Thatcher comes to power, and the organized labor movement is essentially dealt with on a different basis. But it's always been there. That's part of the UK political fabric. And I just think, in terms of the way in which that plays out, I think the UK is in a better position now than it was under Boris or under Liz Truss. The government there seems a little more stable. It does seem to have a little more credibility than clearly Truss had at the time. So I think they're in a much better position to deal with this kind of dissent, basically because it's organized dissent. It's through the organized labor movement. And I think given that inflation, it seems to me, is starting to peak a little bit in some areas, that the overall profile of the UK is going to continue to improve as the year goes on. France, however, might be a problem. The extent of the opposition to pension reform, I think, is formidable. And I suspect it's largely because of the timing. And if the pension reform process was begun prior to the pandemic, for example, if the economic conditions were better, then I think Macron would have an easier time of it. So, there's some political dimensions I'll talk to you about this that are now present given the election this summer. But I think the timing here is not the greatest. He just simply has to do it now, or it's never going to occur. Inflation isn't terrible in France, at least by EU standards, but there were controls on energy prices and so on that are now going to be lifted this year. So the French are going to start to feel the effects of some parts of the cost of living, and so it really doesn't come at a great time. Nobody really wants to see these kinds of adjustments to the working life, if you will. And given that the economy is not doing well, and given that Macron doesn't have a very, very strong hand in the National Assembly, this is something that I think will carry on for quite some time. So we are a little more bearish, if you will, on France right now than we are on, say, on the UK. One of the things that I think is we're going to watch for, and I think we'll have to be used, just given that Macron does not have the kind of power or the legislative sway, if you will, in the National Assembly that he did last time around, is that there is a provision that they've used a few times this year in the Constitution that essentially allows the president to rule by fiat. Okay, they can kind of bypass the National Assembly. There's a little bit more to it than that, but they're not subjected to the same kinds of voting in the upper and lower houses than would be the case. Otherwise, the problem with that approach is politically it doesn't look good, because you're essentially saying to the population, we don't care about the National Assembly, we don't care about the popularly elected officials of the country. We're going to bypass and get these policy reforms through. That's where I think it's going to run up against this general atmosphere of strike activity. So again, France is a question, or a situation, or a country rather, that we're looking at. And again, it's probably more problematic than, say, the UK is at that point, just in terms of overall government stability. And as far as Brazil goes, I had some discussions with some institutional investors over in Europe earlier this week, and they were quite surprised that our overall risk ratings, and I mean, they were only looking at one number, but our overall risk ratings for Brazil had improved in December, even in light of the protests. And I tried to explain to them is that we look at about 22 different political risk variables, one of which is overall government stability, but we also look at, the risk of internal conflict. And the risk of internal conflict in Brazil has always been moderate, if you will. So these sorts of things don't surprise us too much. But overall government stability, given that the election was held last month, or the month before rather, cleared up a lot of the uncertainty surrounding which way the vote was going to go, and the extent to which Bolsonaro's supporters were going to put up a kind of some real significant opposition to the change in power. The things that we saw in the Capitol, I think they were handled fairly well. I don't think you can compare them, as some have done, to what happened in the US a couple of years ago. I mean, It was a slightly different situation here. But the government managed to control it, I think. And the extent to which we heard from our clients that there was going to be further shutdowns or further protests in other parts of Brazil really haven't come to fruition, at least the way they thought they would. So I think overall government stability is okay in Brazil. I think the real wild cards, though, are the way in which Lula then has to now deal with the military, because a lot of the military has support for Bolsonaro. And I know they're going through a general purging at this point in time to get rid of sort of, problematic elements of the military. And if you go back into Brazil's history and go back into at least the pre-Cardoso era in the 1990s, I mean, dealing with the military in Brazil was a problem. I mean, it was a military regime for a long time. So I think this is an area that a lot of people aren't talking about right now. And I don't think you have to worry too much about a Bolsonaro supporter blocking a road or something like that. It's really how, Lula and his new cabinet are going to deal with the military and how that's going to work. That's the political risk that we see happening there. And of course, Lula's, I guess, control of the military is not great. It certainly isn't the way it was with Bolsonaro. So again, this is something that I think we are most concerned about when we look at Brazil. And as far as the last item goes with inflation and the Fed and what's next and implications, I think there's a general consensus now that we do see some peaking in parts of inflation in some countries. I think the big question is how sticky is it going to be? I honestly believe, and I don't think there's many that would disagree with me, in the US alone, getting to that 2% target by next year is I don't see it. I mean, unless there's an absolute, I wouldn't call it a crash, but if the economic and labor conditions in the US get to the point where there's, large scale unemployment and more layoffs and things like that, I can't see it coming down that quickly. You really have to look at the components of inflation to make that call. The issue is about Fed credibility, because they do have this 2% out there, and there's all kinds of talk right now whether they're going to abandon that in favor of a 3 or 4% or a 5%. I think if they do that and say that we're now going to be targeting inflation at a higher level, then the credibility of the organization really comes into question. That's a huge political risk for us, because a lot of it depends on, to what extent, and a lot of countries are like this, but to what extent can we actually, look at the Fed or look at the central bank as a credible source of general economic conditions, or at least their ability to control inflation. So in the case of the EU, or the EC rather, the European Central Bank, I think they're going to hang in there a little bit longer. I don't think they have the kind of pressure that the Fed has at the moment. And this is why we tend to be quite bullish on the EU-US dollar trade right now. We've talked to our clients about that. So essentially, that's how we see it. That's about a 20-minute discussion on some of the major political risks that we see. We do cover 140 countries, so there are smaller risks or smaller countries that we're watching right now. But in terms of the stuff that we all think about and hear about, that's really where we are. I think there's a big wild card to summarize with China and the extent to which it produces a variant that might be a problem for the rest of the world. But we do see China as sort of going back to the way it was pre-pandemic, much more engaged with the rest of the world, but yet defending its interests. Protests, given the cost of living and given the extent to which there's many governments out there that don't have solid majorities, or, they're confronted with a population that is split along, ideological or party lines. When you combine that with higher cost of living, that's a problem. And again, central bank credibility in the US, I think, is questionable right now, or at least the people are looking at it to see what the Fed's next move will be this year. So with that being said, if you have some questions you'd like to talk about for the next 10 minutes or so, Tracy, then let's hear them.
Beautiful. All right. So Ravi did type in a question. And so he's wondering, what are your views on upcoming elections in Turkey and its implications on its economic situation?
Yeah, Turkey's an interesting case in some ways because, first off, Erdogan has a fairly stable following. Okay, it's not as, I mean, when you read the Western press and the reports on that, you think that he's incredibly unpopular, but he's not. Okay, he does have a very good base, if you will, of solid support that won't go anywhere. The problem we have with Turkey is that, he's done quite a bit to eliminate the opposition. Okay, so there's an issue about democracy there. There's an issue about the credibility of the regime. And if you do eliminate the opposition to the extent that they don't pose a significant challenge to your power or to your electoral chances, then that is going to produce itself in other areas. And I do recall, I think it was 4 or 5 years ago when the protests did occur in Turkey. They were put down quite easily by the authorities. I see as, to some extent, I see a replication of, I don't think conditions have changed all that much to that extent. I just don't see Turkey. There's a couple of ways of looking at it. I mean, I don't see Turkey changing all that much over the next little while after an election. I really don't. There's always the risks out there of dissent, credibility, government stability, and all of that kind of stuff. But where I do see Turkey's role being much more prevalent or much more significant, and I think the president has used this to his advantage, is on the international side. Okay, he's really holding up the extent to which some countries can enter NATO, and he's done a very, very good job, and a lot of it's geographic as well, in playing a kind of mediator or middleman role between, say, NATO and the West and Russia for the Ukraine war. So the consequences are not unlike what we've seen in the past. I don't think it's going to, present us with a situation that all that much different from what we've saw 5-6 years ago. So the political risks basically remain the same. They just become a little more accentuated or a little more visible during election time. So I think you can go back to the last time there was a vote and basically say, all right, under those conditions, if we see the same thing happening, the same consequences or results are going to occur. The only thing, again, I think is different from Turkey in this sense is that it plays a much more significant role internationally than it did the last time around.
Thank you.
Okay.
All right. Any other questions? You can unmute and talk right to Chris. Oh, David's got a question. Go ahead, David.
Did I raise my hand? I didn't raise my hand, but I will have a question for Chris. Hi, Chris.
Hi, David.
Nice to see you. Thank you for joining us today. We had a meeting with our European members yesterday with that group. And I had an economist on, and the question was presented to him, and I want to present to you is, have we seen the end of globalization in the world? Like, are we like, is this a contraction back to, well, not mercantilism, but like protectionism to?
What did he say? And I'll tell you from a sort of academic perspective, like a theoretical perspective, but I'll also tell you from a practical perspective. What did he say?
I mean, he said, we are not about to move back to mercantilism. Countries won't be making everything themselves, but the days of reliance, especially and I think in light of what's happening in Russia, what could happen in China with Taiwan, the days of countries importing all of their natural gas or not having some semiconductor production, we've probably seen the end of that.
Yeah, I would agree to that extent. I would say that the world has changed. I would say, and this is what I alluded to with the supply chain adjustments in China in favor of Vietnam and Thailand. So I think those things are there. And again, this is when I mentioned that it will take some time for China to come back to the position it was, say, pre-pandemic or so on. But globalization is kind of a weird topic, because if you look at the history of it, it kind of goes like this, up and down and up and down. And so the big wave of globalization that we saw in the late 80s and into the 90s, where everybody kind of accepted this, and this was the way to do business, and there was cheaper labor elsewhere that would drive down costs and so on. Obviously that's not going to come back anytime soon, because we're not there yet. Okay. And the one thing that business does do is adjust quite flexibly. But the extent to which countries hide or develop enclaves or spheres of influence, I mean, that's nothing new. You look at it historically, that's always been the case. I mean, all you have to do again is go back, to the even go back to the 1980s. I mean, we're old enough to remember that. There was, the Soviet Union and there was the others. And we saw politics and we saw economics through that lens. And that was the way it was done. There was nothing new, but it changed. Obviously, it changed in the 80s with the opening up and the dissolution of the Soviet Union and so on. So we're just simply going, I think, through another period in which the world economy is realigning itself in various ways. I think the idea, quite honestly, of developing self-sufficiency in some areas is a good thing. But again, this is not a new topic. I remember being a kid in Canada during the late 70s when there was the energy crisis, and that was all the rage, energy self-sufficiency. Remember Petro-Canada came about and the West hated it because they wanted to sell their oil on the broad market at a lower cost. And Ottawa said, no, you have to sell it for this price. And Trudeau, the first Trudeau, was hated because of it. I mean, again, this is, nothing new. It's recasting itself in a different era and perhaps with larger players. So there are benefits to that. And there are, I guess, negative consequences to it as well. Do I think that parts of Europe should be producing, their own natural resources or natural gas energy? Sure. I think it provides that security. And I think that's very good for business. Is it going to be any cheaper? Well, that's where technology comes into play, and that will take some time to play itself out, or it will require a greater role for the government in terms of how it manages the costs and how it subsidizes, and that's going to be a challenge itself. So I think, yeah, we haven't seen an end to it. We're just going through another wave of sort of an anti or a different way of looking at globalization, but it's not going to disappear. And absolutely not.
I guess I look at it as, is this a bigger of those kind of like cycles of contraction or contraction expansion? In those cycles, is this one different? Is this enough to affect job market, production domestically that we would notice, right? Like that it would matter in the United States, or that it, is it, or is this really just a kind of, the onshoring before we offshore again somewhere else?
I would agree with that, honestly. I mean, capital goes where it gets the best return. And one of the ways it gets its best return is by lowering its input costs. Okay. And I mean, that's sort of the guiding rule. And so, there's been all kinds of things. I mean, I always give you these anecdotes because that's the best way to look at it. But I do remember, I think maybe 12, 13 years ago, when a lot of American companies that were doing some of their manufacturing in China and Asia started moving it to the US South. Okay. I mean, I'm in the US South, and I know like Boeing is sitting here right now. I know Volvo is here. And one of the reasons they moved it down to this area is because, these are right to work states. They don't have to deal with labor unions. Wages were a lot lower, at least at that time, than they were in, say, the North and so on. So they were competing. I think I can't remember what the politician was. It was a Republican politician, so you would get this. But I think the unit cost, like the labor unit costs in some US states during that time, were actually lower than parts of China. Okay. And you didn't have to deal with all the issues that you would have to dealing with the Chinese authorities and the transportation costs and so on. So, David, I guess my point is that it depends on how you look at it, which industries, which products, and so on. But again, if you adopt that fundamental rule that capital will go where it gets its best return, and again, that depends on, the costs of production, then it will just do what it has. One thing that I've always told people, and I tend to get off on a rant on this, but I realized this years ago, and I constantly say this, is that, risk, generally speaking, because this is what we're talking about, is something that we deal with on a daily basis in our lives. Everything we do, getting into our cars, going to a conference and getting COVID and all these kinds of things, that's what we deal with. And so the idea is that you manage risk as a multinational or as a trader or as an exporter. You don't shy away from it. So there's always going to be, that way of saying, all right, can we resume production in China, but under what conditions? And if they're there, they will do it. I don't think there's any sort of hard and fast rules that now shapes the global economy and says China's off limits, or, we're going to onshore for the next 10 or 15 years until it becomes, profitable to outsource again. It's probably the case. I just don't think you have to hang on to it in very, very general terms. That's all.
All right. Thank you, Chris.
Yeah.
my friends.
Let me just add one thing, David, because it's funny because in October, we had discussions with one of China's sovereign wealth funds. And the disconnect between what they were talking to us about and what was happening sort of on the political side was interesting. And for a short while, and I don't know exactly why, but we couldn't, like, we got banned in China. PRS got banned in China. So but we fell into the list of the Wall Street Journal and the Financial Times, all of those. You can't get that stuff in China either. So we had clients that were hotmailing me because they couldn't use their government email addresses, where they were blocking, saying, I think this is a mainland issue. We don't know what to do about it. And I mean, what am I going to do about it? I have no control. Now, since then, it's been relieved. We're back on, good ground, if you will, and there's no problem. But, you also have to understand, I guess the point is that, the Chinese authorities, I think, if we're going to focus on China, they do have to recognize, I think they are, that their, business has to resume. It cannot be done in an isolation, and it cannot be done to the detriment of, say commercial interests. It's just a balancing act all the time. To what extent do you open up the economic, levers of power, if you will, or the economy, at the same time control social dissent or social dissatisfaction with certain things, and that again applies to the business sector. To what extent will it be okay again on a general basis to manufacture in China? It'll happen. It'll just take some time. That's all. You can't. I think one of the things we realize, and again, I'm going overload here. You just can't realize countries cannot operate in isolation all the time. They just can't. Okay. People don't operate in isolation. So companies can't, and economies of the world can't either. It's just, we're going through a funk right now, and it'll sort itself out somehow.
All right. Thank you, Chris. I appreciate the thoughtful answer.
Well, and that brings us to the end of our time. So thank you, Chris, for being
You're
here
welcome.
with us. We appreciate it. Thank you
Alrighty.
all for being here with us today. Mark your calendars. Next month, February 17th, we'll be talking currency risks with Fred Dons. So we'll see you then. Have a great weekend, everybody, and we'll see you soon.
Thank you, guys.